Hello guys, this is your market report for this January 30th, Wednesday. Now, let me move this out of here, the way here, and let's talk about, first we're going to talk about Italian bonds. The thing is the real problem with the Italian economy now is switch from the banks more to the Italian bonds, and the reason why is these banks are heavily invested in the Italian bonds, and also so are the other governments. The governments of France and also the government of Germany is heavily invested in Italian bonds. And so there's a very much of a vested interest now in order to support these bonds, because if these bonds start to go down, which because of the inverse relationship means the Italian bond yield start to rise too high and investors start to lose confidence, what will quite literally happen is there could be a meltdown in the entire European Union from this. Worse than Deutsche Bank. This is a worse situation than Deutsche Bank. If Deutsche Bank went down, they could possibly contain it. But this could be a doom loop that they cannot contain because of the way banks create money and the black hole in the financial system that this could actually create, because of the enormous amount of leverage that the Italian banking system has created, investing in these Italian bonds that are basically worthless. But let's get right in here, and I'll start the charts and show you what's going on right now. Right here, I start the charts, and what we're looking at is these Italian bonds are actually enjoying a new start after 2018, after a market rout in 2018. In 2019, these Italian bonds are actually doing quite well. And the reason why there's so much demand for Italian bonds right now is the central banks and the big structure. They know that this is the weak spot, and they're buying them. They're buying them themselves. What they're doing is doubling down. It's like a poker game when you double down, right? These guys are actually doubling down on this debt, trying to support the system, because they know if faith gets lost and this gets away from them, this thing can melt down the entire system. Worse than Deutsche Bank. And this is a situation that's actually worse than Deutsche Bank. Let's get right in there on some other stuff on the markets today, and let's go to the gold price today. We're looking at 1309, and we're looking at down $1.50, which is not much. It's still staying up pretty good, and one of the things about this is the Federal Reserve. If we go over here and we take a look at Powell, what Powell's doing, he's facing a reckoning now on the Fed's $4 trillion debt question. And the thing is they're starting to back off the pedal, or starting to make motions that they're going to back off the pedal. Do you have any idea how bullish this would be for gold prices? Very bullish indeed. We're looking at 1309 right now. Let's take a look at silver. Silver, we're up 6 cents on the day. We're at 1586 for silver now. That's quite a little bit better. We were down in the $14 range for a while there. We're back up getting up near $16 for silver, and this has all got to do with what the Fed's doing, and what Powell's doing, and how they're talking now more dovish, and getting more dovish on this all the time. The Fed is, where they were hawkish last year, with 4 rate hikes last year, so. Oh, what is going on here, for crying out loud? Now we want to take a look at, I lost my Bitcoin chart. I hate laptops. Honest to gosh, I hate laptops. I like that desktop's an awful lot better. But we're going to take a look at cryptocurrency market capitalizations. And Bitcoin hasn't been going much of anywhere lately, really. But our market cap today is up just a little bit. I think it was 113 billion yesterday, and now it's 115 billion. Looking at Bitcoin dominance at 52.9%. And some of these coins, one of them in particular here, XRP, Ripple, skyrocketing today. Up 10% on the day. It's just moving straight up. A number of these coins are popping upwards in price. Litecoin is starting to pop up today at $31.73, you know. And of course, Bitcoin is up a little bit, marginally. It's up almost 1%. It's at 34.77 today, the price of Bitcoin. And so now let's take a look at, well, I had something on here I wanted to show you guys. And it looks like when that mouse hit the thing the wrong way, it looked like it popped it off. Anyway, what we're looking at is, we're going to go in here in the bonds and rates. We're going to take a look at the Italian yields today and just see what they're doing. Well, first we'll take a look at the regular U.S. Treasuries. We got them on right here. And in the U.S. Treasuries, all the yields are going up today, all the way across the board. But it's not a lot. It's about 1 basis point, roughly. 1.2 basis points on all three of the Treasury yields here. The 2-year, 5-year, and 10-year. They're all up 0.12%, which is just over 1 basis point. Now let's take a look at the Italian bonds. See what they're doing today. Now see, the yields are falling on all the Italian bonds. Across the board, just look at it. You can see it's a constant falling yields. This means that the bonds are rising, that there's buyers coming in for Italian debt, which is probably right now the worst place you could possibly put your money. I do not believe, personally, I do not believe that these buyers are anything except the banking community. And what they're doing is they're buying up Italian debt right now in order to protect the system. This is what I think is going on, personally. And so we see all the Italian yields across the board. Can you believe these prices? Look at the yields. Like on an Italian 30-year, you only get 3.4% interest. I mean, who's going to buy that much? The Italian government is broke. And all their banks are broke. And the only thing that's holding them up is these debt instruments, which are these Italian bonds, which are absolutely worthless debt instruments. And there's so much of it. If this goes down, this is worse than Deutsche Bank. And that's why they're buying in. But all they're doing is doubling down. They're just doubling down on this debt. And it's absolutely ridiculous. But this is what's keeping our system going now. Let's run in and see. Yes, the stock market is open. We're going to take a look at the stock market right now. I'm going to have to refresh the page. The Dow today. Open up the chart just a little bit here. And we're going to see what the Dow is doing today. Market open, 256 points to the good, it looks like. 24,809. It's up 1.04%. If it keeps climbing like this, it's going to be up to its peaks of what it was. You know, let me go to the 2-year chart here real quick. Clicking on it. Maybe I'm on the 2-year chart. Anyway. No, it doesn't look like the 2-year chart. Let's try a 5-year chart. This chart isn't working very good. Okay, well, let's go on and take a look at oil prices today. $53.89 for sweet light crude. It's up 58 cents on the day, or just over 1%, 1.09% for sweet light crude. And let's take a look at the U.S. dollar index. 95.94% today. So what we're seeing overall is we're seeing the dollar starting to gain a little bit more strength right now. This should be bearish for gold, but it's not, because there's information coming in that the Fed's starting to change their monetary policy a little bit. They're starting to yield a little bit. Especially now, it's looking like they might yield a little bit on their quantitative tightening, which could there, showing my have unresponsive pages. So anyway, that's what's causing my computer to go kind of slow right now. Anyway, so if they do yield, on this quantitative tightening. This is what's been supporting the dollars, that raising interest rates and this quantitative tightening. If they do yield and the dollar starts to weaken rather quite a bit, I mean, it could drop right back down into the high 80s very easily. This is going to be so bullish for gold, it's unbelievable. And not only bullish for gold, it's also bullish for cryptocurrencies. And it could be a shift, because that Bitcoin doesn't seem like it wants to go any lower than about 3,400. And quite seriously, if we see a shift in gold and silver, we could also see a shift in Bitcoin start to move upwards. And as these markets start to heat up, it tends to bring more positive energy into the system of these particular markets. The more they heat up, the more positive energy is, the more people start to come in and investors start to see them as a good place to go again. But I do not believe that investors are actually buying into the Italian bonds. I think it's the system that's buying in to the Italian bonds right now, and that's just the only thing. Oh, I'll talk about the Brexit just for a minute. I almost said brick exit again. I don't know why I keep doing that, but the Brexit, it doesn't look like any real deal other than a hard Brexit is congealing. It looks like that's the only thing. It looks like we're heading right on March 29th. It looks like we're head for a hard Brexit. And I don't see anything else coming out of that right now, except a whole bunch of arguing back and forth and plan Bs and plan Cs, and none of it going anywhere, Anyway, thank you guys for listening. And like and subscribe, and we'll catch you in the next show. Bye-bye, guys.